Credit cards are already kind of like virtual money. So what the heck is a virtual credit card and why would I need one? These are the questions that I had before talking with Lucia Kim. She's an expert at Ramp who was kind enough to catch me up on not just what virtual credit cards actually are, but also how they can help companies save time and money.
Lucia, just to kind of start, like at a high level, what are virtual credit cards and how are they different from what we might call a normal credit card?
So it can be a little confusing, but a virtual credit card is a digitally generated card number that's tied to a real credit card account. So unlike a traditional credit card, you don't get anything plastic, but you get all the card details. So think a different credit card number, expiration date, a CVV, and you could use it the same way that you would a physical card. So if I'm using it online, I would just enter the virtual card's details and be able to use it. I could also use it physically in store by adding the virtual card to my Apple Wallet or Google Pay. The way we like to think of it though is we can get into it, but a virtual card is really used for its security and control reasons as well as it's easy to reconcile on the back end. So we say that the kind of normal physical credit cards that you would think of traditionally are ideal for general business spending. So travel or everyday expenses like coffee, so a variety of different things, versus the virtual card has a more specific use case for either online or reoccurring purchases, because you can do like a set and forget mentality given the specific use case you give it. To make it a little bit easier to understand, say you're using a traditional credit card to, get a coffee or like book a flight, you would have a separate virtual card for like, say your company's Zoom account. You say you have an annual subscription. You know how much it is monthly, how much you have to spend. You know that it's going to go on for that 1 year and you know it can only be charged with Zoom. Then you would have a separate virtual card for that Zoom subscription. You would then have a separate virtual card for, say, your Notion subscription. The setup of like this one-to-one with different virtual cards makes it really easy to control your spend and be able to like see it very transparently on Ramp's platform.
So that was interesting. A virtual credit card is just like a normal credit card, but by being virtual instead of plastic and ergo being able to make new ones on the fly, they unlock some unique use cases for spend control.
Maybe just to elaborate on that, like why would I create a card specifically for my Zoom spend? Maybe what are some other, what are the kind of accounting problems that that's solving for?
I like to say the two main things are the virtual card has better security and control, and then kind of what you just alluded to, the accounting and the reconciliation piece. So when I think about security and control, if you have a virtual card, you can set spend limits on it, the merchant restriction, and expiration dates. So you're really limiting your risk and preventing unauthorized transactions. So if I'm continuing on to that Zoom example and I want to create that virtual card for $100 for a monthly limit, say for some reason Zoom increases their pricing and you weren't aware of that with another credit card because it's just like one transaction out of 1 million you probably have on your card, you don't have as much transparency as you'd like, versus with that virtual card, it would flag, hey, this price is above what you set, it wouldn't go through. Or if more seriously, Zoom suffers some type of security breach, you can immediately just go in, toggle and disable that virtual card. So that's kind of on the security side of things. For the accounting and reconciliation, because you have a virtual card, say just for Zoom, any transaction that I make on that Zoom virtual card is already categorized with the correct vendor, accounting category, and memo. So when it comes to syncing all of your transactions to your ERP, that all those transactions are coded correctly. It reduces the manual work that you have to do, which means less work for you on the back end when it comes to accounting.
Cool. Yeah, I guess I hadn't really thought of that kind of stuff. Is there maybe anything else that would be a surprising use case of having a virtual credit card?
I don't know about surprising, but I can tell you about sort of the main ways our customers use it, which we talked about. One is a little bit of that subscription management. So by having a unique card for each subscription, you're reducing your company's SaaS sprawl. Same thing for vendor management, right? Having a unique card for each of your vendors really simplifies reconciliation from a bill pay perspective. I would say one thing that I love that I can really relate to is using virtual cards for subscription trials. So I often will go back in my credit credit card transactions and see that I had 3 that I forgot to cancel and now I'm like getting charged for the like actual subscription, versus if I had tied a virtual card to it and said, hey, I'm, testing out this subscription that's trial for a month, that virtual card would automatically like stop working after a month, right? So obviously that's just me and my personal life, but if you zoom out and think of that at a company scale, like you could be saving lots of money with just better tracking.
How quickly, I guess, then can you make these virtual credit cards, right? Because like you're saying using a different credit card for all these bespoke purposes. Like with my normal credit card, like it takes me, if I can call my bank and get a card in maybe a week.
Yeah.
But how quickly can you make these virtual credit cards, and like are there limits?
So the virtual credit cards can be made instantly, and like there's an unlimited number of virtual cards you could make. So if you think about like one sort of overall credit card account you have, and these virtual cards being different numbers within that account, unlimited, issued instantly, and again, like you have that immediate financial control of issuing it, but also disabling it, changing the ownership of it. So there is a lot of flexibility, but it's much quicker than waiting for your card to arrive.
Thankfully, I don't have to wait for a credit card for my bank that often, usually just when the card number gets stolen or something like that.
Right, but that's the good part. Hopefully, if you're just using this virtual card, right, for like an online purchase or whatever, no one can really steal your card, hopefully, unless, right, like there's a security breach, but it's not like a physical credit card where like if you leave it somewhere, then you have to cancel and call your credit card accounts. So reduces the risk of fraud there.
You can just go into the back end and turn it off.
Exactly.
I definitely wouldn't have thought of using individual, separate credit cards to kind of compartmentalize my company's spend. But Lucia's examples highlight some realistic ways that strategy can save money. And the added security benefit to that control makes me surprised that not all accounting teams are using virtual credit cards already. And I guess up to this point, we were talking about how businesses benefit from virtual credit cards, but I was also curious how they can work for employees who don't necessarily manage budgets, but who do need to spend from them.
Feels like we've been talking about how you might use them as, someone who's in charge of the finances of your company, and you might, apply them to different types of spend.
Mm-hmm.
It sounded like there was also maybe kind of another angle of like using them to distribute to your employees to give them certain spending privileges and capabilities. Is there anything you can elaborate on that?
It's kind of, I guess, from a different POV, like you said, for employees, using kind of a real life example right now. Like at Ramp, I have a virtual card for a project that I'm working on for the next few quarters. And so my manager is instantly able to issue me that virtual card with a specific card number for a specific limit for the next 3 months. And she knows that I'm going to have to use that to like say, test out a new video tool that I'm going to be looking into. And then I can easily just submit the card details for that unique card. And that draws, again, just from that virtual card she issued me versus kind of my general expense fund. So again, it's like really easy for me to know, like as an employee, this is how much I can spend within this time period, and this is the unique card number that I can use for any transaction related to that project.
We've kind of been talking about virtual cards generally. What makes virtual credit cards at Ramp special? Like what makes them different maybe from other virtual cards?
Yeah, I think when I think about Ramp's virtual cards and having sort of that unmatched automation and control, and given our like platform of being able to set really detailed spend rules down to, again, the vendor, the category, timing, even project. And when you think about that within Ramp's all-in-one platform, it's just one other method of spend that you can track very intuitively and easily. So if I were to go onto Ramp's platform with these virtual cards and set very specific limits or controls on the back end, all of our advanced accounting automation applies to these virtual cards. So transactions are automatically mapped to the right expense category, the vendor, the memo, which makes just understanding your spend across all the different types of spend that you might have really, really easy.
Is there anything else that we should know about virtual credit cards before I go back into the wild?
I would say, to sum it up, to make it really easy, like I would just think of virtual card and what are the use cases. And the use cases are for reoccurring online purchases or like one-off expenses that you need for like a specific project, a specific duration of time, which separates it again from a general credit card that is mostly used for like a variety of things. And kind of the specific use case makes it that you would want extra enhanced security security controls, which is what Ramp's virtual cards can do.
That makes a lot of sense. I think I have a pretty good idea now, and you actually showed me a couple of examples I hadn't been thinking about, so that's awesome. That sounds really powerful.
So virtual credit cards are a tool that companies can apply strategically to save time and money with better control and security and flexibility. Big thanks again to Lucia for the education. If you got as much from this conversation as I did, don't forget to like the video and subscribe to Ramp for more expert tips on how your business can save time and save money. See you next time.
Thanks again, Lucia, for taking the time to talk. See you around at Ramp.
Of course. Thanks, Mark. Bye.
And on cue, I don't know if you can hear my
I can hear it now.